Hey, good morning, guys. Bonjour à tous. We'll do this from the patio this morning. I wanted to show you the scenery behind me, all the trees, and that's actually beautiful. But my light that I use to light myself, maybe you can see it in my glasses if I do this. Yeah, so this light is not powerful enough to overpower the power of the sun. So basically, what you see is, oops, sorry, lost my notes. So what you see behind me is basically the wall of my house. So what else? So by popular demand, we are back on a Saturday morning. Um, I would have liked to keep it on Monday, but since it's more convenient for you, that's fine. At least I have more flexibility on Monday to do some other things. So we'll back on Saturday, every Saturday, 10:15 a.m. And we'll go from there until it changes again, right? So let me go back. I was browsing my stuff. So without further ado, let's start. What happened this week in terms of geopolitics, economy, and markets? So geopolitics, just to give you a brief introduction, is a little bit more of the same, to be honest. So I'll try to go as fast as possible. Economy, we had a lot of data that, as you've seen, impacted the market pretty significantly this week. Well, significantly, I mean, everything is relative, obviously. But, given the low volatility environment that we have been used to over the last 10, 15 years, um, every kind of move like this week becomes significant. And the markets, so economy, markets, and we'll probably try to spend a little bit more time on this. So let's go with geopolitics and Vladimir Putin visiting Mongolia. So why is it interesting? It's interesting because Mongolia is part of the Internal Criminal Court that issued a warrant against Putin to be arrested. So theoretically, Putin visiting Mongolia, he should have been arrested by Mongolia and delivered to the authorities to be trial. Obviously, this is not exactly what happened because Putin was received with a red carpet, and this shows basically it's another shift from the Western global control, I would say, to a more balanced control of the world between the West and the East. Mongolia doesn't have much choice anyway. Mongolia, they are stuck between Russia and China. So basically, their natural allies in this context is Russia and China, the BRICS, basically. So it's not. So what happened is not surprising. It's also again a demonstration of the lower impact that the West can have on the BRICS region, and specifically Asia and the East. So why do I put Medvedev on an insert at the top right? Just because the US has mentioned that they would deliver long range weapons to Ukraine to be able to attack Russia inside its territory, which is again a really big threat. And Medvedev, the former Russian president, responded by saying that they may extend a sanitary cordon to Poland if Kiev actually receives long-range weapons. Again, it's a really big threat, but it's kind of, I would say, natural. Just imagine that if Russia or China would establish military bases with long-range weapon in at the Mexican border, for instance. Obviously, that would not be acceptable for the United States, and Russia obviously deems it's not acceptable for Russia. So again, it's always the same strategy of further little provocation, little escalations to force Russia to react and put the blame on them if they are going further, which they didn't do much at this time. So the situation in Ukraine is not evolving very well for Ukraine. They are still losing progressively ground on the Eastern Front while not making any progress in the Kursk region. As you know, they have difficulties to conscript new young soldiers. What I find interesting, so you know, basically, I am doing some photography. So I'm following a lot of photographers from the east. Ukrainian photographers are pretty good, I would say. I like what they do. It's very moody. A lot of dark, black and white photography. I like that. I like that style. If you follow me on Instagram, but what I noticed is that most of the photographers that I follow in Ukraine, while the Ukrainian model stayed in Ukraine, the men actually have left the country. For just to give you two examples, for the two that I like the most in Ukrainian photographers, one is in Germany, the other one moved to Poland, and these are young guys, 25, 30. And it's been widely reported that a lot of young men are fleeing Ukraine not to have to fight against Russia. But it's not against Russia, but they just don't want to fight. They don't want to go into the meat grinder, basically, at this point. So last insert here, no more Russian gas, which is now more Russian gas, because for the first time since the sanction have been established, now Russia has outpaced the United States in delivering gas to Europe. You have to know that even if the US has blown up, it's not a conspiracy theory anymore. But if Russia has, so if the US has blown up the Nord Stream 2 pipeline, the Nord Stream 1, the original pipeline, is still active, but Europe doesn't want to receive Russian gas through this pipeline, mainly for communication reasons, because they still accept Russian gas from a Ukrainian pipeline and from a Turkish pipeline. Everybody knows that. It's just communication for the populations at this point. And again, if you want to go a little bit into economy here, you've probably seen that Germany is in big trouble with their economy. They have a business model that relies on cheap energy from Russia. So building industrial in Germany and exporting, and both cheap energy and exports are down, so which takes down the German economy at this time. So Germany is in trouble and basically has no other option than accept the cheap Russian gas at this time. Okay, so let's move on. Middle East, quite a significant news. We saw this, coming because Russia, Turkey has formally requested to join the BRICS organization, which in response, the BRICS has invited Turkey to join them at the next meeting. I believe it's in October, if I remember well. That's a kind of issue because, like I said, in the separation between East and West and a potential conflict in the future, Turkey is a NATO member, which with the biggest military in Europe. And that's a big deal because if a conflict starts between NATO and the BRICS, well, Turkey will have to choose, and they are likely to choose the rising block rather than the, I would say, declining block at this time. But don't worry, you have some elections, so they're in November, so there is still hope. At least that's how I see it. So a little bit of information on Israel. Nothing much than the usual. Hezbollah at the north, Iran still developing, and how do you say that? I'm losing my English. J'aimerais le faire en français, mais c'est juste pas possible. Okay. So Iran is still enriching its uranium, and they say that they would be able to have some uranium for nuclear weapons pretty rapidly. Within weeks, it would be taking them a little more time to put that into an actual weapon that they could throw to Israel, which is their main objective, I guess. But the other important point in Israel is that Netanyahu has mentioned that he will never remove the military from the Gaza Strip, which it was kind of obvious from the beginning. But the other point is that he will not remove the military from the Philadelphia corridor, which was part of the Camp David Accords in 1971, 73. I don't know, but who cares? I mean, it was a long time ago, let's put it that way, from 40 years ago. The Camp David Accords, which a peace between Egypt and Israel, where they agreed that the Philadelphia corridor would be left, it will be an unmilitarized zone, demilitarized zones, DMZ. So Israel, obviously, this is a breach of this accord. We all know that Egypt will not do anything. They are not in a position to attack Israel anyway. And now that a lot of the military forces are in the Mediterranean to protect Israel, to support Israel against a potential conflict with Iran, basically there's nothing that will happen anyway because Egypt doesn't have the mean to respond to that kind of situation. You may have seen one last point that some U.S. soldiers that are stationed in Turkey have actually been kind of beaten up, in the street by some young Turkish. You have to know that. So Turkey is a Muslim country, so they're naturally supporting their Muslim brothers from Palestine, when the US is obviously supporting Israel. So when you have that kind of situation where you have soldiers, so US soldiers walking around the streets in Turkey, that makes this a dangerous situation for them. Um, So Asia, I just wanted to a little bit of Asia because Xi Jinping and China is extending its grasp on Africa for natural resources, obviously, but they are doing it in a much more subtle way than the Europeans did at some times by colonizing these countries. Um, so basically, the influence of of Europe and the US, so the West overall in Africa is decreasing, and now Africa is becoming the playing ground of China and Russia, which again, is a grasp on the natural resources from Africa. So now, if you combine the natural resources from Russia, China, and Africa, basically it's what, I don't know exactly, but it's 90% maybe of the natural resources, specifically rare earth, things that are used to build semiconductors, and all that stuff. Energetically, obviously, the U.S. Can be independent, but in terms of rare earths, I'm less sure about that. So I will not venture in that, but that could be an issue specifically, in a world where the technology is much more preponderant. We need to have this. So that's a kind of a security issue, I would say, as well, for the US. What can I say about that? One last funny thing. Let's finish the geopolitics by a funny statement. I'm just trying to check the time. Yeah, okay. Funny statement is that Hunter Biden has changed his plea to guilty in a tax fraud case. So what I've read is that it can lead him to up to 17 years in jail, I guess. So the only reason that I see that he would plead guilty is because he's expecting a pardon before the election. So just put this behind him. That's how it works, my friends. Justice. Okay, next we'll move to economy. At this point, we had quite an eventful week in terms of economy and data. I'm just adjusting this stuff. Sorry. In terms of economic data, so market were closed on Monday for Labor Day, obviously, but you had the ISM manufacturing PMI data on the second. We had no on the second on Tuesday. We have the July JOLTS job openings data on Wednesday. We had less important maybe the ADP non-farm employment data on Thursday, and more importantly the initial jobless claims data. No, I totally messed that up. We had the initial jobless claim data on Thursday as well. And we had finally the August jobs report on Friday, the one that triggered the mess yesterday, basically. So let's start with the US manufacturing. So as you can see, the trend is down. Maybe I can show you slightly better like this. Yeah, so both trends are down, whether it's the US or the global manufacturing PMI, which means a contraction of the activity. So the activity is shrinking, like we've seen for quite some time. I guess against this trend. The bad thing is that rising prices are still rising for at the output, and so it's starting a lot looking like stagflation at this point. I don't have the data for inflation with you, but so the decrease seems to have stalled. I've shown you this, I believe, on Monday. So we are going to a stagflation at this point. We had, on a global scale, we had inflation slightly going up as well. So this is kind of where we're going at this point. So yeah, so we have, like I just said, we have food prices going up. So a recession, prices are going up. Again, stagflation is difficult to say to say anything else. To add to the really ugly situation, we have now spending. So the debt interest is 3 billions per day. The interest expense over the debt. I believe I have the. I know I have the numbers here, but yeah, 3 billions per day. It's triple the amount from 10 years ago, and it's double what we used to pay in interest only 2 years and a half ago. So that's totally insane. So we are going to a point where um, it's increasing exponentially. Uh, Taxes will not be enough to cover this, and the only solution will be a technical default, which is going back to the the big money printer with J Power or something, someone else possibly. Um, so you have on the right the job openings, total non-farm job openings. They are collapsing as well. So not a good sign. Again, I don't believe I have much indicators, economic indicators of that I've seen that would suggest we are getting out of the current situation and it's improving. If you have this, don't hesitate to share this with me. I'd like to take a look. So what can we say about that? Job openings. Maybe we'll go to the big one, which was the August jobs report yesterday. It's just basically a confirmation of what we've seen for many months now. Again, another revision from the past job reports, downward revisions, obviously, with the exact same data that we've shown for months, meaning that the full-time employment is shrinking quite significantly when the part-time employment is increasing. So it's I don't know if this word exists in English, but it's an increase, I would say, in precarity, in job precarity in the US, and people are getting poorer. They are replacing, if you replace a full-time job by a part-time job, it's not the equivalent. And basically that's what the current administration is touting at this point. We are, because a full-time job, you may need two part-time jobs. Obviously the jobs number is increasing, but it's totally fake. But on top of that, the job increase, it's revised on the downwards every almost every single time. And it's probably 12 12 time that has been revised time over the last year and a half. So basically that's insane. So the recovery, the jobs in the US is not what we are said it is. On top of that, you can see that so the second chart, for the Native Americans, native meaning born in America, not Native Americans. It's getting complex. Language is getting complex in the US. So people born in the US, you've seen that they have barely reached the level pre-pandemic. It's going down as again now, as you can see. The only thing that is going up is for foreign-born workers, where they have increasing jobs. From my perspective in Europe, and specifically immigration, what happened in Europe is that a lot of, specifically with the socialist government that we had, in France for and globally in Europe for 20, yeah, I mean, so the first real socialist government in France was in 1981. And so basically we've had already 40 years of socialism in France. And what they did, basically they were importing immigrants that were giving them voters, because they were quickly naturalized as citizens. So they were quickly naturalized, so they were becoming voters. And by spending there was, these people were basically subsidized, so politicians get voters, and industries were getting cheap labor. I It's kind of the situation repeating with, again, like I said, very often the US is Europeanizing at a pace that I would not have considered before. But again, hope is not lost. We have elections in in a couple of weeks. I have a fly that is running around me. It's just flying around me. It's just getting me crazy. Um, so that was part of the job reports. You can see on the top that people are not working anymore. So if you basically add these numbers to the official data job numbers for unemployment, where unemployment is around 4 point something, 4.2, I would say, yeah, let's say this 4.2, then the actual unemployment rate is more like 7 to 8% than the 4% that is advertised at this point. And again, something that I've said multiple times already over the past months, but it just became some. I mean, it's funny, isn't it? Because people seem to realize this when it has been happening for months. So what I was about to say is that most of the jobs created are coming from government related jobs, which is healthcare, government, and government itself. So that's basically totally unsustainable because they are not productive jobs. An administration does or government doesn't produce anything. It consumes energy. It doesn't produce energy and growth. It's that simple. So we had some, obviously, I mean, it's always the same game. What the Fed will be doing in September in terms of rate cuts. We had a slight bump in terms of odds of 50 bips rate cut after I don't remember the name of the job reports that was on Wednesday. I know that I've noted this somewhere. Yes, the JOLTS report, job openings on Wednesday. We had a slight uptick in terms of rate cuts odds with 50% bips rate cut. But with the August jobs report, this went down pretty significantly, and now a cut of 25 bips is in the books, basically 80%, according to Kalshi, which is a prediction website where people can vote and for what they expect, vote and bet. I think as well, but now there's a consensus for a cut of 25 bips in September, and a cut of above 25 bips, let's say 50 bips, as declined as of Friday. So I didn't note the number of unemployment. Yes, regional. Okay, so we are at 4.2 unemployment rates. And so as a reminder, I put these quotes from Zero Hedge, where they were recapping the prediction of Goldman, um, from the unemployment rate to the potential rate cut. You probably there's a lot of dogs barking around. So there's one over there. There was mine that is barking on the other side. It's crazy. I hope you don't hear them too much, but it is what it is. Sorry. So yeah, so we are 4.2, and so the 50 bips are basically seem to be out of the picture, or at least according to Goldman, because it said 450, 419 or lower, 25 basis cuts, and 420 to 429, 25 basis cuts as well. We had to reach 4.3 unemployment level to justify a 50 basis point rate cut, which again might actually be the real unemployment rate, but the Fed is not acting on actual numbers. We know that. So let's move on to markets right now. And with a little bit of transition, with a chart that I shared on LinkedIn on Friday, with the S&P going up and the JOLTS number that was published again on Wednesday going down. Usually they obviously following the same path. We have a big, very pretty significant divergence between the two at this time. So it seems to be natural that something will have to give. Jobs are what they are. This is not something they can control. We know that the stock market is propped up by expectations about interest rates. So the more I will change to. I need to change my caption. So not an investment advice. Remember, guys, we're just expressing personal opinions here. We are not giving any investment advice. That being said, my friends, the easier path to reconcile this divergence is obviously the stock market rather than increasing the jobs number. Make it what you want. But that's what sounds natural. And with the most recent job reports, people are starting to finally acknowledge the real possibility of a stagflation and a global recession. We always say that everyone knows that we are in a recession, but everyone says technically we are not. Okay, fine. You can lie to yourself as much as you want. That's not what I do. We are entering we have entered the month of August, which is always a little bit of a crazy time. Let's put that back here so that I can see the chart at the bottom. Yeah, because September is the most volatile month of the year. This is one of the last year that has an average negative month over since 1950. You also have February that is slightly negative, but actually this chart that I've shown is part of a statistical analysis. And while February negative average is not significant, the negative average for September is actually statistically significant. So we have a month that is more or less, negative with a very significant variance. Obviously, it's not always the case. It's just an average. It doesn't mean much. But what is certain is that September is a more volatile month than most months. Actually, it might be the highest volatile, and we experienced that on the very first day of the month where the market drops. It was a sea of red on Tuesday. Didn't recover for Wednesday, Thursday that were also down days, and then we had yesterday with the drop in the market after the August job report that, as we've just seen, was very ugly. So the first reaction, if you followed the market yesterday on the August job reports, it was everyone saw that it was really bad. So the first reaction was, and that's what I posted in yesterday on LinkedIn. So bad news is good news. So the market starting going up. First reaction was to think that maybe the Fed would cut more than the 25 bips anticipated. People started coming to reality and say, okay, maybe the 5 bips are not in the books, and we'll get all 25 bips, which might not be enough to cover the ugliness of the job reports for August. And then after that, the market caved. If you look at the term structure at the bottom right, it's really, really flat. It's been flat over the past couple of days, which in my opinion means that basically the market doesn't have any clue where it's going at this point. It's I think I've said this on Monday after the first drop. The term structure, the volatility term structure, the S&P volatility term structure was flat again, which means that we are kind of a tipping point. We basically don't know if we are tipping into a much more serious situation or if we are going back to normal. Now we're going, so it slowly it quieted down for on Wednesday and Thursday, but on Friday we went flat again on the tipping point, and we might have another surprise, on Monday like we did at the beginning of August. I come back to this in a second. So basically, that's performance for the week. You have basically a sea of red for this week. The only green stuff specifically for equity is our short ETFs, which will not be surprise anyone. And the other green stuff is VIX going up. Again, obviously, you have slightly green area for the bonds, which makes little sense. But you see that the bonds do not cover the risk on the equity side. Again, probably because of the concerns about inflation. So this is where we are now. So I mean, we have some equities potentially going down. We have bonds not covering, and we have, in the context of a global recession, commodities that are going down. So if you are a long only investor, it might be difficult to find areas to protect your portfolio. One of the way to protect your portfolio in the case of everything going down is to move to, when you have to be invested, obviously, and you cannot go in cash, which is most of the large fund long only industry. They have to be invested at a certain level, so that's why they are going to lower volatility sectors such as utilities, consumer staples, that kind of stuff, which can offer some protection when you have the market. In terms of, when I say protection, it means that it will go down not as fast as the rest. So that's the kind of protection that you can have when you are long only, without any kind of downside protection. That again can be offered by commodity trading advisor who have the potential to go short markets and benefits. So that's the kind of where CTAs will make money. So you would have so bear markets basically, and other long-term trends. But if you want to cover equity and bear market like 2000, 2003, 4, 2007, 2008, these were really good periods for trend following CTAs who have the ability to go short. That's always a good, nice way to have in an investor portfolio. What is it? I mean, I can barely see my screen because of the light, so I won't be able to much say. I, it's very difficult. I didn't plan that. I have difficulties to see my screen, but as far as I can see, yes, this is the chart for the S&P and the Nasdaq. Well, we had a dog barking. Now I have a guy mowing his lawn, but we are nearly finished, so it should be okay. I didn't. Let me. I'm sorry. Let me change something. Oh, I mean, guys, I didn't. I didn't see the chat. Attilio saying ciao, ciao, bambino. That's the only thing that I can say in Italian before going to the market. And is this live by Enric? Yes, this is live. I've moved back to Saturday morning, and I don't record my stuff. I'm doing it live. It's a little bit more messy, but I save some time and I don't have much. I know, Enric, that you have your own group live running shortly, so I try to go very fast. I don't have much to say. I have given the meat that I had to give. I see no screen or chart, just black. Seriously? So I cannot tell you what happened. So you'll have to listen to me, I guess. I'm sorry about that if you don't see or hear anything. But here, I mean, this is the chart where I was showing Nasdaq and the S&P 500, both going down significantly this week for the first week of the month. You've seen that we have retraced half of the ramp up that we had since August 7. It's always stairs up and elevator down. What else can I show you? This. So the VIX. Oh shit. Oh, sorry. Let's do this. Yes. So the VIX. So you've seen the VIX has increased on Tuesday and on Friday as well, not as dramatic as we've seen on Friday, August the 5th, that led to the massive spike in the VIX before on the futures before the market opened on the 5th in the morning, and then the craziest collapse of VIX in history. We're not getting there, but we might be if it's going further in a much more, let's say, ordered way, if we can say it like this. Yeah, this is the dollar yen. So you see the dollar yen and the collapse at the beginning of August, which led to concern about the carry trade. We are below that level at this point, so it's not looking good. We might still have some carry trade unwinding. You know that Kuroda has mentioned, as hinted about potential hike rates, which obviously carry traders will not like. I have also seen articles that carry trade may now use the Swiss franc, which has very low interest rates, to do their carry trade. So that will be interesting to move, but that's a really significant potential risk for the U.S. markets. What it is the oil. You've seen that the oil has just broke down on the lower side of the wedge. I think this is in the context of a global recession, and so global recession means less demand of energy, less demand for oil. I believe that's where we are, and this is where the market is telling us. Bitcoin suffered as well this week for a simple reason. It started being. I don't think it has anything fundamental to Bitcoin itself. Bitcoin is now invested more by institutional, and we have less and less moving addresses in owners of Bitcoin, which means a little bit more less liquidity on the market, which means anytime we have moves, it can be even more dramatic, specifically now that the institutional investors are starting to get into the Bitcoin market and can move it quite significantly. And Bitcoin is a risk on asset, and we had a risk off week. And you start, when you want to de-risk your portfolio, you start to get rid of not of your core positions, which are often equities, but you start getting rid of your non-core asset, which Bitcoin is at the moment. I would not read much more than this in the Bitcoin price at this point. And I think we're done, my friend. 11 a.m. So, Enric, if you have your own live, you probably already have left by now, but you can go. For once, I just finished in time. So thank you guys for joining. Uh, how do I get this? Yeah, I can do this. Oops. So thank you guys for joining. Well, this time I had the pleasure to do it on the patio. That was pretty cool, and I hope to do this on the patio as long as the weather is fine, which can extend quite a long time into the back season in South Carolina. So again, um, if you want to have uh, if you have questions that I do not see here, you have a couple of hello messages, that kind of stuff, but no questions. If you want to contact me about any kind of advice or what you'd like to do, I'll be happy to answer your questions. I love basically what I do. So any conversation based on that kind of stuff, whether it's the market, geopolitics, a little less economy, to be honest. But if it's about geopolitics and markets, you can contact me anytime. I'll be really happy to have a conversation with you. Um, and yeah, basically that's it. So I will. Oh, okay. I just had a notification, sorry. So I will leave it there for now. I wish you a great weekend. Enjoy it. Enjoy the end of the summer days. Let's go back to work because, again, September is a really active month, as I've told you, and there's a lot of work. Specifically, me. If you want to know, on the business side, there are quite a lot of things that are moving at this time, specifically in the crypto space for hedge funds. This is what I'm working on at this time. So we'll see where it goes, but I'm pretty happy where it's going at this point. Again, if you want to discuss about this as well, happy to do it, because the crypto space need more TradFi solutions into the sector. I discussed with a lot of former crypto traders, and most of them were exploiting inefficiencies before you had some bigger money getting into the space. So basically, profiting from the retail traders, and that kind of part is mostly gone at this time. And with the institutes, I need to think about this word, Insti- institutionalizing of the crypto space. So big money is coming. These inefficiencies have disappeared mostly, and now this is TradFi coming into the crypto space with much more classic strategies, such as statistical arbitrage, relative value stuff between the different tokens in the crypto space. So that's get interesting. That's a new avenue for me, for money managers. So I'd really like to expand to this. That I run my own stuff, specifically on crypto and on macro tactical asset allocation, let's say, for my retirement fund, and kind of evolved CTA for my trading book. But again, I could stop. I will stop because you probably don't care so much about it. So thank you very much for joining. Really happy to see you again, guys, and see you next week, Saturday morning. probably on the patio again if it's